What's going on, everybody? Welcome to another ticker fee video and welcome to the ticker fee family. So the ticker symbol we're going to be talking about today is CTRM, and the stock has been wild. It has been crazy. So what we're going to be talking about today specifically about Castor Maritime is the financial results highlights of fourth quarter and year ended December 31st, 2020. Then we'll follow up with Biden's $2 trillion infrastructure plan and how I think that will affect Castor Maritime in a positive reaction, and then we'll end the video with the chart analysis / price prediction. For those that have been supporting me so far, guys, I really do appreciate it. Thank you so much. And with that being said, let's go ahead and get started. Okay, guys, so what I wanted to point out with Castor Maritime, so if you actually go on my channel and look, I've got an update on the vessels that they have recently been purchasing. But what I wanted specifically to point out is that if you want to see a full analysis on Castor Maritime, on the company itself and what they do, if you're tuning in for the first time, you can check this video out. But just so you know, what they are is a growth-oriented global shipping company, and they are engaged in seaborne transportation of a wide range of commodities along worldwide shipping routes through ownership of dry bulk as well as tanker vessels. So keep that in mind if you're tuning in for the first time and you're thinking of buying this company. Now, with that being said, let's go ahead and look at the financial results. Okay, so I pulled up the highlights of the fourth quarter and the year ended for December 31st, 2020. But just real quick, leave a comment down below if you own this stock, how many shares, if you're thinking about buying it, whatever the case is. But anyways, let's check this out. So with revenues, I highlighted, by the way, what I thought was pertinent for this video when it comes to the numbers. Now, revenues was net $4.4 million for 3 months ended December 31st, 2020. Now, the comparison, as you can see, I highlighted both 4.4 million, but it was compared to 2.8, which is huge. Now, that's going to be a 57% increase, which is great. I like that a lot. Now, with net loss, right, we've got to know the facts. The net loss was $0.8 million for 3 months compared to the net income of $0.5 million for 3 months the year before, right? So keep that in mind, which really honestly, that's not that bad for what they're doing. I mean, they've been buying vessels over and over and over. For those that have been watching this channel for a while, you know that they've been buying quite a few, and so that's going to come with the just the overall journey with this company. So now, loss earnings per common share, you've got 0.01 cents loss per share compared to 0.20. I mean, that is a huge difference, especially when you own thousands of shares, right? Now, with the EBITDA, it was 0.3 million versus 1.1. So that's a 73% period-to-period decrease. That's amazing. I mean, these are the numbers that you want to hear. Clearly, they're slowly starting to gather momentum, literally. So, average fleet time charter equivalent, the rate was $10,000 and $257 per day for 3 months, right? And before that, it was $10,789. So that's only a 5% decrease. Not a big deal. Now, cash and restricted cash was $9.4 million, right? Compared to $5.1. So guys, I mean, clearly it's an 84% period increase. I mean, I'm not sure what more you can ask for out of this company. I mean, they're small, they're a penny stock, they're trying to grow, and right off the bat, starting this foundation, to me, this is exactly what I want to see. Now, let's switch over to the earning highlights of the year ended. So revenues net, okay, 12.5 million as compared to 6. So that's 108%, 2 times. Great deal. I mean, that's what you want to see, right? And that's net. That's not gross, right? So for me to see 2 times, I mean, man, if we could keep this year after year, or even not even 2 times, but just 50%, but 108, I mean, that's pretty incredible. So now with the net loss, you've got 1.8 compared to 1.1. Now, clearly, again, like I said, like I had talked about previously, they're buying these vessels, right? So the net loss from 1.8 to 1.1, as many ships as or vessels that they've got so far, I mean, it comes with the territory. Now, lost earnings per common share is 3 cents compared to 31 cents. Again, more bank in my pocket. I'm not losing it. We're keeping them afloat. Again, literally. Now, with the EBI TDA, it's 2.3 compared to 2.2. That's only, respectively, like it says, a 5% period to period increase. And then last, the average fleet time chart equivalent, the rate was 9,765 per day for the year ended as compared to 10,471. So that's a 7% period to period decrease. So I really appreciate the breakdown. I mean, especially for those that, I mean, enjoy a little bit of statistics or data or whatnot. These are the numbers exactly what you want to hear. So for me, I appreciate for the individual that took the time to give us these numbers. That way we don't have to try to add it up ourselves. But again, if you want to understand the company overall or just what exactly they do with the commodities and whatnot, check out that channel. But with that being said, now let's see how the infrastructure plan will affect Castor Maritime. Okay, so if you were living underneath the rock, just kidding, but seriously, if you haven't seen what's been going on this week, it's been amazing. I've been waiting for this for a while. It's been really difficult to check out the stocks every hour, every day, when the stocks were just dropping and trying to correct itself and whatever the case was, right? So many factors that play into that, many variables, but this week, specifically these past 2 days, overall in the economy, in the market, awesome. And so I think for Castor Maritime, this is going to have a good lasting effects in these next few years. So let's look at the numbers again, because when it comes to the numbers, they don't lie. Now, President Biden this week unveiled a massive infrastructure proposal that he says would deliver a once-in-a-generation investment. And that's going to go straight into the market from what I see. All right, so it's a $2 trillion price tag. Now, the U.S. ranks 13th in the world in overall infrastructure, according to the World Economic Forum report in 2019. So I thought that was pretty interesting. I mean, depending on where you are in the United States, I mean, I feel like overall the infrastructure is pretty good. Clearly, we can always do better. But I've traveled all over the United States for previous jobs, and I mean, I can tell you, I mean, for the most part, depending on where you're at, I mean, they do a pretty good job. But when you see construction going on, that only lets you know that the economy is doing really well. Now, 28%. The proposal would be paid for with a slew of tax increases on corporations. The main corporate tax rate would be raised to 28%, which would be about half as high as what it was before the Republican tax cut of 2017 that lowered the rate to 21%. So keep that in mind. That's an increase of 7%. Now, while the plan would spend most of the one-time funding over 8 years, the corporate tax changes would raise the estimated $2 trillion over 15 years. Okay, so this is not just like, for example, the stimulus with this is just right away with a couple trillion, like within, a month or two after deciding. This is over a 15-year period. Now, $400 billion. The proposal seeks to spend hundreds of billions on what are traditionally considered infrastructure, right? So 500,000 among the plan's investment in electrical vehicles and their infrastructures are grants, incentives for public and private entities by 2030. Now, let's check out the transportation. Okay, you've got 174 billion in EV, 115 for bridges and roads, 20 billion to improve roads. Okay, 85 billion in railway, 50 billion in airport, 17 billion in waterways and ports of entry. So that's what I wanted to point out and highlight. See, it's the infrastructure. So you're looking at neighborhoods, highways, whatever the case is, airports, but 17 billion for waterways and ports of entry. So that's going to be your Gulf, right? The coast, Castor Maritime. So that's what I wanted to point out. These numbers are good and for many different infrastructures. And so if Maritime can move the their commodities, that's only going to help with this infrastructure because it's going to want the economy to continue to circulate. And so I wanted to point that out. So this is going to help the workforce, this is going to help the individuals, and that's going to help us in the work world, right? So that's going to be great for the market. Now, with that being said, I just wanted to point that out. Let's go ahead and finish this video off with a chart analysis and a price prediction. Okay, so if this is your first time tuning in, most of my supporters know this, but with the candlestick chart, again, as always, a simple method of displaying price information in a market. Unlike a simple line chart, each series on a candlestick chart contains these 4 data points. Okay, now that's going to consist of the opening price, the high price, the low price, and the closing price, right? So those 4 is what I want you to keep in mind. But when you're looking at the anatomy itself, you've got the body, which indicates the open to close range. You've got the wicks, also called tails or shadows, which are those long, those long thin lines above and below the main body. Now these reveal the intraday highs and the lows. And then you've got the color, which most people understand what it represents, which is going to be the direction of price movement, which is green, right? Price increase. And then you've got red, which that body indicates price decrease. And then the last thing what I want to point out is going to be the support, right? So that's going to be looking at the volume. So those are the buys and the lows, not one or the other. It's both, right? So you're going to see that volume when there's 4 million trades, it's moving up and down, whatever the case is, right? And then it's going to be the resistance. So when you expand looking at the chart here, look at the volume right here on January 27th. That had 773 million, right, trades, right? So keep that in mind. So that will help you out here. Now, when you're looking at the chart itself, you can see that the resistance was around 0.7380. Now, when you expand it, you'll see that the resistance line has gone up, right? So you're looking at 0.7794, right? Now, it had a high of $1.95, but I think it's got a new support line, which is what you are going to want to see and to know, right? So that resistance has gone up, and so has the support, which is clear and positive. Now, we're trying to reach the $1.95 as its new support line. But now that it's leveled out, thankfully, especially with the news here lately, and overall through that whole month, it leveled out, and so that's good. So I think at this point, the more and more catalysts that we get, it's going to increase. So for me, this is a good financial results, and I need them to keep that momentum. Now guys, I really do appreciate you taking the time to listen to this video. It really means a lot to me. I really enjoy talking about this stock. And as always guys, welcome to the Ticker Feed family.